Nathan,
Angelo,
on the back of rising interest rates.
look, that is the talk. It
Yep.
doesn't matter whether you're in the newspaper, TikTok, Facebook, Instagram, everybody's talking about it. Real estate agents, we're
Yep.
all talking about interest rate. What we are hearing and what we are seeing, so we are conducting more appraisals now than we have for the last couple of years.
Yep.
So what is becoming very obvious to us is that people are now asking the question, what is my situation?
That's right. They're having a good look at their current situation, but probably not for all the reasons that you would immediately think in real estate. It's not just about getting ready or coming to the market to sell. People are having a good look at their current position to consider buying, getting into the market on leverage and gearing, and also in those conversations that they're having at the moment with their brokers. So the refinances and looking to shore those repayments up for yourself if you're in that boat, getting a firm indication on where your property value sits. Is definitely a great starting point if you're having those conversations with your
lenders.
lenders.
We're getting quite a few people that are asking from an insurance point of view.
Correct.
Many people are aware the cost of building has increased significantly in the last 2 to 3 years. So on that basis, so many people are finding themselves a little bit underinsured.
Yes.
So the property prices have come up, so your land value is high, yes, but the replacement cost of your home
Significantly
significantly
changed.
higher.
Yeah.
So, and with the increased cost of insurances, everybody's trying to balance it out. So now,
You say interestingly, we'll move on to that point with the cost of building and possibly part of the impact that that's having with land inquiry right now as well.
Yes, so these numbers will slightly change, but at the time we're recording this, there are around about 22 lots for sale.
Yep.
Now they're privately owned lots, which we have not seen that many vacant lots available for a long time outside of a developer.
And a good mix of land ready to build on. There's titled land.
It's titled land where previously we might have had to wait a year or two for land to be ready. We've now got land available. What we're seeing is a big drop off on that land inquiry, particularly for the larger lots. All of a sudden we're seeing the smaller lot sizes from an affordability point of view becoming very popular. And the per square metre rate on those smaller lots has actually increased, while on the larger lots, the per square metre rate is coming down. Back. So it is now a really good opportunity. If you've been hanging out for a larger block, then right now could be a great time to be in the marketplace looking to buy. And if you are looking to build, we are hearing that the time frame for starts has really shortened.
Yep.
So you may not be waiting as long as you were
to get the builder on the go.
On it last year.
Yeah.
So that's really interesting with land. We're also seeing in the market investors.
Investors are back. So there's a re-energised approach. Investors are definitely active in the past, well, from the time of recording again, 14 to 21 days. Not only the local investor, but people still having a firm eye on Griffith as a really good opportunity to buy property in. We've been speaking to people all the way up and down the East Coast, all the way around in Victoria.
It's good to see. There's obviously a huge amount of money, investment money available, and they are buyers looking right across the country.
They are.
They're looking for strong fundamentals, and they're some of the things that we've got in Griffith. So they're looking for strong capital growth, which we've proven. They're looking for high rental demand, which is very, very obvious. They're looking for low vacancy rates, which nationally it's the worst it's ever been. And they're also looking for the rental values.
Yeah, there's two parts in that. So definitely one of the big factors is yield, so that rental return. But one of the things that has come up in conversations recently is around a maintenance schedule. So the investors that are looking, and these guys are looking across the whole country, are definitely putting energy in asking the blunt question, what is the standard of maintenance, what is the current schedule, and what is happening with the property.
Looking for higher quality property where the tenants are happy, they don't have a lot of ongoing fees and charges in terms of keeping the property up to scratch. Now, within that group of investors, we're seeing the mum and dads are back. So we at the start of the video we mentioned we're seeing a lot of appraisals and getting a lot of requests for appraisals. A lot of that is also on the back of mum and dad investors who are leveraging the equity they've got in their homes. So in the last 5 years, the median house price has grown 80%.
Huge.
And a lot of the mum and dads we deal with are now looking for how,
Unlocking.
as a family, can we start to put our children in a really good position? How can we put ourselves in a position of security for retirement? And so the mum and dads are coming back to us. They're finding out that their properties are worth hundreds of thousands more than they may be anticipated, and learning that you can take that equity out and use it as a deposit.
100%, which also then lines up with some very interesting reading that we've had and some of the normal stuff that we see in what could be a changing market, particularly, again, around interest rates and the cost of borrowing money. The funniest thing is, there was a meme, I think we put it up a week ago, when interest rates possibly seem to have that level off or look to come down, there's at least 250 buyers that we've spoken to in the last 7 days, 14 days.
It's been incredible.
That have said, hey, we're just waiting to see what happens. Now, if every one of those 250 buyers waits to see what happens in their favour with either a hold or a drop in rates, that is going to be putting a lot of people back into the marketplace. So one of the things we can definitely suggest to you if you are looking to either invest or upgrade or downsize, whatever it is you're looking to do with property in Griffith, now is actually a better time than any to be getting through the door of property for sale.
Well, we look at the auctions, so there's definitely been a trend. There's a handful of auctions that have passed in across all the price ranges, across all the agencies. So there are some opportunities there now, where only a year ago, you couldn't see a property pass in for the life of you.
You nearly couldn't get through the door to inspect it.
The other thing that we're seeing happening, of those properties that are selling, we're seeing the number of registrations is a little bit lower.
Yes.
So the number of people that you're competing with has dropped off. If you are genuinely in the market ready to buy, if interest rates come down in 3, 6, 12 months, even if you're in the market now you're still going to get the benefit of those interest rates coming down. However, you may be able to buy at a better price than you could have a year ago. In saying that, we haven't seen prices come back. So the median house price has still grown at about 2.5% for this year. So the prices aren't coming backwards, but the level of competition has slowed that growth significantly.
Correct.
So we definitely think if you're in the marketplace to buy,
Go now.
Go now.
Go for it.